Hello traders and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 12th. Michael Boutros here with you this morning. Pete, Peter, Pooja, Raf is in the house. Good to see you, sir. Steve, Tom, Trevor. We got the whole crew. Carlos, John, welcome aboard. Gary, great to see you. A quick look over today on all the dollar crosses. Obviously, the major event risk for the week, now that FOMC is out of the way, is going to be tomorrow's highly anticipated CPI inflation report for the U.S. Now, remember, on the back of the FOMC minutes, which again, as we expected, didn't really provide any new revelations to the path for monetary policy moving forward. The takeaways, though, the headlines, the red blurbs, as it were, that came across the terminal and various financial news wires was the concern about inflation and whether or not it was indeed transitory. So with that focus on the Fed, obviously inflation data, we all know that the Fed's preferred inflation gauge is the PCE, the personal consumption expenditure, which comes later in the month. But certainly CPI is sort of that headline read that people will look at. So the dollar is getting a little bit of a rebound today. We've been under tremendous pressure for the last couple of days, kind of hanging around that 2016 low day close. We'll go over what the index is doing and all the dollar crosses. So for on the menu today, DXY, we'll go into the Euro, Aussie, dollar CAD, and Pound Oz, which reversed sharply. Our suspicions there after that reaction yesterday were correct. Dollar Switch, which is Swiss, which is finding some support. We'll talk about dollar yen, which we're holding obviously on the swing side of things. Bitcoin, massive breakout, finally on the top side, continuing that upside swing. And a quick look at Kiwi, which also broke the weekly opening range. No trades on that right now, but continuing to track this rally. And finally, we'll take a wrap up with a look at gold, which reversed off of resistance today. So you might get a little bit more of a pullback there, but longer story looks concertedly bullish on that front as well. All right. Any other questions or trade setups or pairs you want to review? Feel free to throw them on the message board at any point. D, I'm going to address your question specifically there on the dollar yen when we get there, so bear with me. First things first, heading into tomorrow, here's what the data is expected to look like. Now, the main thing that you're going to want to pay attention to is going to be the year-on-year print, and more importantly, the core year-on-year print. Really, that's kind of the main release that you're going to want to focus on. And it's stripping out food and inflation. The year-on-year print for that 1.8% was a nice surprise upside pop last month. 1.7. We're expecting for an uptick to 1.8. If that comes in line with expectations, could see this dollar rebound give a little bit more, to the upside. The broader picture still looks bearish. We broke below the monthly open, but the near-term picture still looks like you could get a little bit more of an upswing. So watch that heading to the close of the week for the index. But anything short of 1.8 or even a hold at 1.7 would be, again, leaning on that expectation of what the Fed could do. Also keep in mind at the same time we do get the release of advanced retail sales. Again, we saw a really bad month last month with only negative contraction of 0.2%. And we'll definitely be taking a look at the average hourly earnings, which again, with price inflation kind of being the focus here, we already saw an upward revision to last month to 0.7. But we'll have to see what this month looks like as we get into tomorrow's release. University of Michigan sentiment surveys were already at pretty decent highs at 95.1, so we're expecting a slight softening there at 95. Again, take it in stride. The real takeaway tomorrow is going to be that core release and the year-on-year print. So focus sort of on these two tomorrow as the release comes out. Any questions about tomorrow's data? You all know how excited we are to talk about fundies. So let's jump into the charts. First things first, a quick look at the DXY and what that's doing. So here's the daily, and you guys have seen this chart multiple times. Also just bring to your attention real quick, see what the weekly looks like. The major resistance level, that confluence that we turned from last month, that 93.89 level, really nice. We closed right below it. Again, that was last year's low week close. You had the median line here, really nice reversal. So pullback has found some support on a near-term rebound. Where does this leave us on the index? Well, heading into the close of the week, obviously that 93.89 barrier is still bearish invalidation. So as long as we close the week below that, the risk still is for the pullback. Daily chart looks like this. Okay, objectively and interestingly enough, we actually broke the monthly open on a close basis, pushed lower, seeing a little bit of a pop here. I want to see us hold below this red slope near term. Okay, for us to continue to favor the downside. And keep in mind that the monthly open comes in right here at 93.28 or 93.30, I think, and that is right alongside, basically where that zone of resistance I want to see. So leaving some more upside room. Again, at the end of the day, close of the week needs to be below that 2016 low day close at 93.89 for us to continue favoring the downside in the dollar. Immediately, though, here's what the intraday chart looks like. Now, when you see a chart like this, and of course, the dollar index, we presented that, I believe, on Sunday. We were talking about the reversal off resistance. June low day close was the first target, 93.52. Then you had the swing lows there. Key support, we talked about this yesterday, 93, basically into 92.95, this zone right here. When you see a reaction like this, you start to look and you think to yourself, well, why the hell did we turn there? What was there? What are we missing? And a quick look at some possible slopes I was looking at this morning, both of which reflect actually a hold at that low. So slope off this high, and the lower parallel literally caught that to the pip. You saw some acceleration and a break on the median line. The 50 line wasn't so clean, although you are seeing something there. We're testing that right now. On a more aggressive approach, if you were to take this slope, same thing. Lower median line parallel, more or less seems to have caught that low. Now, I'm always kind of partial to using the deader slope or the more gradual slope. Tends just to work better in price action. Markets don't tend to hold real sharp acute angles too long. So this is what I would be more inclined to look at. I wouldn't give too much credence to the 50 line because, again, we haven't seen too much reaction there on the downside. But what does it highlight? Either way, it suggests that even if we were to see a rally, towards the median line, that June low day close, 93.52, you would still be in the bottom half of this descending pitchfork formation. So we have to stay as objective as possible, okay? I mean, again, the start of the month was welcomed with that last spike into resistance. I do like the pullback here. Got to soften our bias near term on this rebound. 93.27, those former lows, or 26 rather, and 93.52, both levels of resistance, areas of interest for exhaustion, for possible entry for a move lower back on the index. The chart looks a little cluttered here, but I hope you guys can make this out. By the way, anyone who's new to the room, feel free. There's a camera button in the top of your GoToWebinar screen. If you click on that, you can take a freeze frame or a screenshot of anything you see presented. Any questions on the index? So I'll leave that slope on for now. The lateral levels have been working pretty well, so I'm going to continue to focus on that. But when they have confluences like they do here, further continue to suggest keep that focus lower, sub 93.52 near term. Could see a little bit more of a pull higher before we turn lower. Questions on the dollar index? Once, twice. Sold. And again, we'll be very focused on this as we head into tomorrow's U.S. inflation report. By the way, like I said, the risk is on a pullback to the dollar like this, the risk heading into tomorrow is for a pop higher on a better print. We're already looking lower. So we have to always keep in mind where we are in trend, right? So the risk tomorrow is for a move higher. If it comes into an exhaustion region, one of these two levels that we're looking at might be an opportunity short, barring like a 2% clip on the print. And with the same respect, obviously, if it comes out lesser or weaker than expected and the dollar pullback, it's the break below that lower parallel that will put us on course for continuation lower. Okay, keeping in mind where we are in broader trend. All right, enough about the index. Let's jump into the euro dollar. obviously, typically a kind of inverse picture of what the index is doing with this currency comprising 60% roughly of the DXY. Here's what the euro looked like earlier in the week. We highlighted this one on the 10th. And here's what we were looking at. Early in the week, or I guess earlier in the month, heading into NFPs, again, we talked about the lows that we were looking at here for possible exhaustion. 1679 turned out being the golden play, and we've been ripping to the upside ever since. So looking at euro, at the start of this week, once we cleared 1769, again, continued to keep the topside focus and play while above that region. Initial resistance 118.30, backed by 118.18, that 50% retracement, and that was just almost the exact high. Okay, the high that you posted here in overnight trade was 118.79.980. So you basically missed it by a pip, but you get the picture. So yeah, downside breaking momentum below 70, sure. Likely to see a little bit more of a pullback on this play before you move higher. The initial part or level I would look at, and it's just uncanny, is this region right here. 118.30, maybe down even to 118.25 or so. You could see so many pivots in price, irrespective of the fact that it is just a 38.2 retracement. You have spike lows, spike highs, spike lows, test of support, the break saw acceleration, perfect resistance, the break saw acceleration. Look for a near-term reaction here at 118.30, 118.31. So for me, I'm not really interested in trading on the short side of the euro right now. I kind of just want to see this pullback find some support, possibly for another stab to the upside. Again, remember, basic trendline resistance coming off of the monthly, I guess this is the yearly highs right here. That kind of just gives you a basic confluence region with that 618. It's going to be a larger region as you move out into the end of the week, but basically 119.30 into 119.20 would be the top side objective on a breach. Any questions on euro? So a possible play for tomorrow, again, dollar kind of rips higher on the news maybe, gets this back into the 50 line, somewhere around here. And then you would look to fade that to the upside again. Or if we come into US session today and we kind of find some support here on a topside trigger, I'd be willing to play it against 118.20, 118.30 to try to see if we can get one last upswing. But from here, you'd need to see this come closer into support before you get long on the euro again. And again, keep in mind that that's event risk tomorrow could chart some volatility in these crosses. Any questions on euro? So as far as the levels are concerned, and again, the weekly chart, keep things in mind of where we are in trend, right? Upslope support, former yearly highs, really nice rebound. Even if we get the pullback, you'd look to see if you can stretch that to another high. Anything on the euro? So as far as the near-term levels are concerned, no change on any of those. Right on track. If we do break 1831, you kind of want to just carry this. Don't focus. I'm going to change this. Don't focus so much on that 236. You'd want to do the monthly, basically. That's secondary high. Look over here. Choke that up a little bit into like 1790, 1788. Okay, and that is euro. I wish I had one thing to give us a little bit more conviction on this, was if we would have a little bit more of a clarity on the slope structure to the upside. It's just not there. I was looking at this pitchfork yesterday, which shows the upper parallel basically catching that high, but it's not, it's not the cleanest thing. So I just wanted to show it to you because in any event, you have the median line here, which crosses into 1830 or just around the lower parallel, more or less along that 50 line that we were looking at. So again, I don't want to clutter up the charts for you. I try to be very mindful not to over over complicate the charts, but just keep in mind that that could be a possible slope that's in play. Okay, Aussie dollar. Number 3 is the Aussie. And that'll take us back to last night's update. So we've been following this one since the start of the week. Here's what we look like on the 18th. We were coming into that key support. We talked about the lower parallel, the 2016 high day close. You also had a pivot at 77.50, nice zone. And earlier in the week, we basically cited that, while above this, the downside's at risk. You look to play that rebound. So yesterday in the webinar, Pooja actually helped us identify this near-term slope. Just a very nice channel right off the lows. Nice touch of the highs. Got perfect resistance there at the level that we were looking at. And the pullback last night found support right alongside the lower parallel. Or excuse me, yesterday in US trade. So as we were writing this report, we were right back at the median line last night. We continued to suggest, look, basically while above today's low, you have to stay constructive. On its face value, the weekly open, you set a weekly high, you set a weekly low, you bounce, you check the weekly low again, it holds. Once you plow through the opening range high for the week, objectively, just based on price action, no emotions in it, shifts the focus higher. And, well, we just had a weekly opening range break above support, as I always say, typically our favorite plays. That gives you the even more so the confluence region with the 50 line, all the justification you needed. So it was good and welcome that every time we pulled back, we continued to hold that November high level we've been looking at anyway, 77, 78, which was, again, the weekly opening range highs, essentially. And you saw that hold a support, median line break, acceleration, first target right up at the upper parallel. Just so happened to actually extend right into the level that we noted at 78.36. The high in overnight trade was 78.35.9. So literally just a tenth of a pip off. And this level, my friends, is just derived by observing price action. Literally, the lows here, break, acceleration, acceleration, no closes below, gap, pop back above, move lower, resistance, resistance, break, acceleration, support, break, acceleration. So sometimes just taking a quick look at the near-term charts, jumping into a 60, jumping into a 120, or even a 30, just noting these pivots in price objectively can be very helpful. Anyway, I digress. So, not surprising on that spike to see that the Aussie can give back a little bit, dollar rallying a little bit, kind of works out. So, raise your bullish invalidation level at this point to basically this region, November high, again, the weekly opening range, the same level we were talking about, all converges on the median line and basic channel support. Okay. The immediate focus on this one, if I was playing any long dollar exposures, by the way, guys, this would probably be the one I'd be playing. Remember, we talked about 78.36 actually being an area of interest for possible, exhaustion / short entries, and that's essentially exactly what you got. You got an exhaustion trade right up into that 78.36 level. So I am looking lower. Initial target on the pullback here, if you're holding any shorts, it's 78.04, 78.05, whatever. You're coming into that region right now. Wouldn't necessarily close the entire position. I would look to close a bulk of it heading into the event risk tomorrow, and then bring your stops to break even on the rest of it. The final drop, again, if we do see a push below this, this would be the final target, take off the rest of the trade. And again, just keep your targets on the inside. Don't wait for 78.78 per se. I'd have it somewhere just above 77.80. Okay, but you could see the U.S. trade session come into this region, find a little bit of a support again before it drops again. Long story short, the immediate focus for me in Aussie still remains for a short side move here. Questions on Aussie dollar? And again, Aussie on the weekly. Haven't actually looked at that in a minute. Should be pretty. Yeah. And this is why we want to see this drop ultimately into this zone, guys. So if we take a look again, I don't want to shift your attention too much off, but if we take again your picture again to the longer term picture here, once we break that near term, slope to the upside, and this does, get a break to the downside, your key region or your bullish invalidation or sweet spot ideal entry, whatever you want to call it, is still down here. 52-week moving average, 38.2 retracement. More importantly, the consolidation break off the 2016 lows, that dark red line, also converges in that whole region. So that's basically like 76.80 into 76.30 on the weekly charts. Okay, on the weekly charts. That's your bullish inval. As long as we hold above that, the upslope still remains intact, and you kind of want to look higher still in Aussie. But drilling down deeper in price, sure, near term. First look for this break, and this is this would be the break that would unleash that possible low that we're looking at. Pooja says, "Hey Mike, my weekly Euro Aussie chart. I just tweeted my weekly Aussie chart to MB4X. Please take a glance if possible. It's very different from yours. Also, would you give any credence to that blue ML?" Okay, I was thinking about you with Euro Aussie yesterday when I saw that topside break, Pooja, specifically, and I was just kind of watching it all day. I don't touch it, but it reversed pretty sharp off the level that I thought was going to hold as a major resistance. So you got to probe right through it. We talked about it yesterday briefly, and it pulled back. I'll take a look in a minute. Let me see what you got. Let me get through some of these first. That's a good looking chart. And I will come right back to it. Okay, Pooja, let me add that. Okay. Any questions on Aussie dollar? Going once, going twice. Okay, I'm going to pick up the pace a little bit here. Dollar CAD looks like this. Dollar CAD looked like this yesterday, and as we were noting it, this thing was coming into a very near-term channel support just for the decline. Again, some of these might be some bull channels. I don't know. At the end of the day, objective break of the weekly open and the weekly opening range low was perfect resistance yesterday. And we were talking about this trade earlier in the week as looking for a break of channel support. Again, previous chart is always accompanied, guys, by clicking on that link. It'll always have, if you don't see the daily chart here, it'll be in the previous one typically. But here is what we were looking at to start the week. And the focus was on a break of channel support. Ideally, we would have gotten a spike here first. But at the end of the day, what happened? When we broke channel support, we were talking about it in the webinar yesterday, what did we say? We wanted to see that channel hold as resistance. And as long as it did, it would kind of reinforce the break. Why? Because when we initially broke, we didn't get that run through. So you kind of hesitate when you see that kind of reaction. And you want to really see that slope hold as resistance to affirm the break. And then obviously the move lower, we were looking for 24 an 85 break, and then we didn't quite get into 24.19, but here's what it looks like right now. You can bring it back to a 60. Here's your weekly open support, breakthrough, instant resistance. Here's the channel break. And again, once we broke through it, resistance. Now you had also slope support. Look for the break lower, momentum holding 40 or below 60, well below 60 like a charm. Downside break continues to look for that channel. So again, we dribbled along that channel all night long before turning higher this morning. Here's what, again, the chart looked like yesterday. So we kind of just rode along this channel, pull higher, now testing near-term resistance. Again, 124.84, 124.85. Leave room all the way to the upper parallel here before playing or assuming any type of breakout. Ideally, still looking for that drop into 24.19. Still do like the short side on this. Again, I could be completely wrong, but at this point, you'd think that a break of a parallel or a channel of that magnitude, which held basically latter latter 2 weeks of September, you'd think that break would yield a little bit more room than that. So I'm not buying the reversal in dollar CAD. I still think it looks lower. Look for some sort of exhaustion near term here heading into channel resistance. Any questions on dollar CAD? Pooja, that question with regards to any credence to blue ML, was that on Aussie that you were asking about? And which blue ML? Are you talking about this one? Oh, on my Euro Aussie chart. Okay, we'll come to that. Gotcha. All right, dollar CAD, that's number 4. Number 5, let's cover real quick. Pound Aussie, another one that we followed early in the week. The initial weekly bias to start the week was constructive. We were looking for a break above the channel, target 169.07. Second target was 170.05. We kind of just missed it here. You might have got shaken out, on the pullback. We did finally get the tag of that level last night. So heading into last night, we started saying, look, broadly speaking, longer term, I love the upside of this trade. At the end of the day, while we did look higher early in the week, we're seeing some momentum divergence. We also noted that relative price action in both the Aussie and the pound, really leaves, the pair vulnerable near term. And again, the near term momentum profile turning, just showing ongoing divergence as price action pressed a new high, pressed a new high, pressed a new high, and make a series of lower highs here. So it looked very vulnerable for a turn lower. And again, we were looking for support to the downside, 167.93, 167.81. Happened way earlier than expected, but nonetheless, the low that we just made was 167.95. Okay, a couple pips off. So I still do think, you want to keep in mind that this is the weekly objective opening range low. So I don't want to get all, hot and bothered and start jumping on the shorts here just yet. In fact, if this had happened later in time, I'd actually be targeting some long exposure here. But now that it's happened at this time and this juncture, I'm not really looking to get long just yet. I still think you have more room on the downside. Let me just see what this looks like. Ooh, okay. Interesting. Okay. Okay, you're going to bring that key support at this point. 618 extension, the decline. Gives you 67.58. Okay, and then 67.30, 67.20 is just a huge pivot in price. A longer dated 38.2 retracement from the decline off the highs. I'd be watching that, but this specifically as it converges on the median line over the next day or so looks like an interesting downside support you might want to be mindful of for pound Oz. But and this is just a good lesson for us all. Sometimes it's hard when you come into the week and you're like, yeah, I'm looking at a downside channel break. If we break to the upside, we're coming into support. I want to get constructive. It only took out 2 targets, though. You didn't get the rally into the critical resistance zone again. When that happens, though, we have to be cognizant and listen to price. And this is why last night, things didn't look all that bullish. And again, we just talked about Aussie, right? Coming off support, maintaining that near-term constructive bias. Pound yesterday, I didn't really cover it in the report, but this is what I was looking at. This is what I meant by pound positioning versus the dollar and the euro and the Aussie positioning versus the dollar. Aussie was in a constructive near-term advance. Pound had already made a radical rally right towards slope resistance. So I didn't want to highlight this because I didn't want to advocate a short. I didn't know if you were going to find resistance at that median line, at that, pivot level as a former high and a 16.8 extension, or last week's swing high. I didn't know which one of these I'd look to get short off of. So lo and behold, it didn't even make it to any of them before turning. And again, relative price action with that dollar gave that pound Oz a pretty sweet move. Any questions on pound Aussie moving out from here? Going once, going twice. Okay, that is number 5. Number 6 and 7 will do dollar Swiss and dollar yen. Dollar Swiss, we were talking about that in the webinar yesterday, saying, if you guys recall, I closed out at 97.42 from that short that we took last week. And I had a little bit more regrets, and I kind of relayed that to you yesterday in the webinar. I kind of wish I'd still held on to it a little bit more, but my reservations kind of ended up being, justification for what we did. You had so many different parallels here of the same slope, all of which got play. But at the end of the day, sometimes this could be noise, because where do we turn? Right off the exact, median line. Okay, here's the 50 line for the current operative advance. So there was the exact low. So just to clean this up a bit, let me just take that off. At this point, I wouldn't even bother looking at that. You turned right off this. We'll get rid of that. Okay. A trade which you're coming into upslope support. So the downside bias that we were working with, at this point, you want to soften it. Not necessarily going to change the broader picture, but a couple things I'll note is we did dip below 40, didn't last very long, but that was the first dip below 40 that we've gotten since the open of September. And it's the first dip below 40 we've gotten since going into overbought territory. That's, a hint, a tell in the near-term momentum profile. Okay, looking at it even in a closer term chart, you can see that basically grab 30. Look for the for the weekly open, basically at 38.2 to offer initial resistance on this rally. But the same premise of the trade remained the risk for that downside move well below this key region that we played off last week, that Friday rally. That's still your broader bearish invalidation. Got massive downslope resistance off the yearly high right there. 200-day moving average, the median line, and again, even some former swing lows, spike highs. So again, shotgun approach, if you put a gun to my head, I'd be thinking a little bit more of a rally higher, turn lower again for a break, and before a larger recovery in dollar Swiss. Ultimately, this thing could be putting in a serious base. And a measured move, if this was a double bottom type of play, would get you all the way up into 101. Okay, but at the end of the day, resistance is resistance. So we're looking to play the pullback here. We're looking to see how deep this pullback gets. Respecting the fact that we're coming off the 50 line, for me, if we were to mount back above the weekly open, don't want to be tempted into messing with this spot. You need to either wait for the clearing of the upside to really get this thing fueled up, or if we were to turn lower, see some exhaustion, a break back below the weekly open, I'd be looking to play that pullback towards deeper moves towards 96.70, 96.30 into targets next week. So questions on dollar Swiss. Sorry, we did miss a little bit of the last part of that decline, but not a bad exit. Questions on Swissy. All right, number 7, dollar yen looks like this. Here's what dollar yen looked like earlier in the week. So again, Swissy unchanged. Don't give too much greens to that 97 level now. Just watch that median line. Now that we've gotten that reaction, it's really 96.77 and 96.30 that would be the more clear-cut targets, let's call it, if we cut through the that lower parallel. Talking about dollar yen. So, dollar yen. Turned our focus lower once we cleared below that median line. it was even more reinforced when the fact that we rallied, we held 112.82 as resistance. But we've kind of not done anything ever since, and it's holding a pretty tight range. Here's what it looks like. Let me bring this down to a 120. Yep. This is a bit broader picture of where we are in slope. This was the break that kind of turned us bearish right here. And the fact that on every subsequent rally, weekly open resistance, weekly open resistance. So, right before the webinar, D was sending a message over saying, I see SB Trade Desk is not happy with the dollar yen position. They took it yesterday, 112.15, and stop was 111.95, and now the stop is at cost. So D, just because we bring a stop in to break even doesn't necessarily mean we don't like the trade. It just means that there's things that we're seeing in near-term price action that could be saying something against what we're thinking for that move. And certainly the break below the median line parallel, and for me specifically, again, Jamie will be on at 11 guys today, so he'll be able to give you a little bit more of an in-depth, kind of breakdown of his thought process on that. But, from my perspective, once we cleared and we came back into the weekly open and that held and you moved lower, after a probe into oversold, that's kind of, still leaving the dollar vulnerable. Now you're seeing, again, a little bit of a rebound in the dollar today, which is helping. But for me, I'm still, of the mindset that if you see a break below 112, it was right for Jamie to go break even, because this thing is probably just going to drop real quick into 112.10, 111.10. We talked about, this yesterday, about these being variables in time. So now the efficacy of this zone, you kind of want to start to bring that interest more towards 111.10, and that 38.2 swing low and the lower parallel all converge right there. So if we get a drop here, I'd love to be long. At the end of the day, the longs that we're holding on the swing side, if we clear the median line, that would be an objective break of the weekly opening range, and would certainly shift the focus right back to the upside. So D, when you see price action doing something a little bit iffy in the near term, there's no problem to bring your stops to break even. Okay, if it moves in our favor, great, we're already in it. And if it doubles back as near-term price action is warning, well then no harm, no foul. I'm the king of break-even trades, guys. I mean, way more often than I'd like to admit, to be honest, but it's just a defensive play for me. Capital preservation is everything, So, anytime something in the charts is directly contradicting what I might be thinking is happening, I'll go break even. Even if I was right and I got stopped out, so what? The market will always provide more opportunities. It's better than eating an unnecessary loss when I saw that kind of things were starting to speak towards the other direction. So D, again, we just play a much more capital defensive type of strategy because, again, it's prudent. In longer term strategies, that's kind of what matters, more so than even how big your gains are. Okay, I digress. D says, got it. Thanks, I'm more than welcome, D. Good question. I'm sure other people had questions about that too, so I'm always willing to oblige. Dollar yen, look for this break. Basically, the initial zone is 112, 112.56. That's kind of the range we need to clear. But really, the risk is for a little bit more of a drawdown here, in my opinion. Near term. All right, moving into, I guess we'll do Bitcoin because it was on this same report, and then we'll go into the Kiwi reversal. Kiwi broke the weekly opening range to the upside, so I don't know what to do with that. So I just want to go over it, but I'm not trading it. Bitcoin, perfect tag of resistance. We were looking lower. I wanted to see more of a drop into this zone for entry on the long side. This was bullish invalidation. Target is way up here at 53.75. Again, people thought that was kind of like a radical call because the record high, was 49.79. But there was a lot here to look at. You had divergence into the highs, which shifted the focus and the threat lower. But you're in a clear, really sharp and strong uptrend support or upslope trend. So as long as you stay above the 50 line, inherent support, you're looking for a break to fuel the next leg, targeting that 50 line there, and then eventually the upper parallel. Okay. Again, this is a trade that we were following for quite some time. Here's the daily charts look like. We highlighted this actually the previous week as a resistance zone. We were looking for the break. We finally got it. First tag zone got taken out. Once you make a daily close above the record high day close for an asset, typically that's another really strong bullish indication. So when the 49.79 level got taken out, and again, 53.70 is a 1618 of the advance, and you have the upper parallel there. Fast forward to Bitcoin today. Voila. Topside break. Really clean move through 49.79, which was the record high. And which is why I didn't really even have that, if you guys noticed, as a target, because, if we were to break the slope to the upside, you'd expect to see a fueled move. So you don't want to start like grabbing profits way too early in a move, especially on a break of upslope resistance. We always talk about that being the sharpest part of the move, and here we are. Behold, you can see it right before your eyes. So I do think, you don't want to get too much of a stickler here, but I do think you have a little bit more room to the upside. I would start to close out any long exposure on a trade basis, unless you're holding this for like a long-term investment, which good luck. I think you're playing with fire. But from a trade standpoint, I'd be looking to close out any type of exposure as you get into 52.90 into that 53.75 level. Okay, big zone there. Not only on that measured move, but obviously on some near-term slope resistance, which has been very, very clean. Near-term support, now former resistance and the former record high. That brings it down into, again, 49.79. A topside breach above, guys, if we were to break to the upside here, look for this slope. I'm not really too much of a fan of the upper parallel because we kind of played through it a couple of times, but we'd have to kind of sit back and reassess what near-term price action is saying. You're in no man's land past that. That would be a fresh, record high, obviously, on an asset that does not have too much historic price action. So nice trade at the end of the day, but be cautious on the long side here. Be cautious on the long side. As you get towards that upper parallel, more so towards 53.75. Any questions on Bitcoin? There's like a couple of you who really love this trade. I wonder how many of you are actually involved in it. If the broker you're trading with offers this instrument, I would trade it very cautiously, but there's opportunity. And again, I'm not of the mindset that we're gonna, Bitcoin is gonna be, necessarily the widely expected chain block currency for the world, but hell, I'll trade it. It looks clean. All right, a quick segue to Kiwi and gold, and then we'll jump into your questions. Here's what Kiwi looks like. 9 minute, number 9 on the session. Geez, you can tell it's Thursday. Here's what Kiwi looks like right now. And here's what Kiwi looked like, excuse me, earlier in the week. So the daily chart showed us breaking below a major pivot in price, a key 618 retracement, and the median line for this really sharp descending slope. Again, something I don't tend to stress so much, but it showed a convergence at a couple of different regions, and all of that highlighted the 71 handle, basically. Former swing highs got you, 70, 89, or 70, 90 or so, but this 10 pip zone. And as long as we were below that, I was looking lower, and I wanted to see a drop into this zone, basically the 70 handle or just above. Near-term picture kind of highlighted and mirrored that same sentiment. There's a near-term slope again. There's the downside break. The median line was there. The 618 was there. And it would necessitate a break of the weekly opening range high. More so, I kind of would have loved to drop into here or here to initiate a bounce, but my focus was lower. Markets will do what they're going to do, though. Okay, here's what we look like now. We held that weekly opening range for a while. As we rallied, it was perfect that we stopped and we reversed right off 71. So for me, that was a perfect play. Failed breach of the weekly opening range, tag of resistance. Yeah, cool, let's look lower. Guess what? The entire time we were trying to make that pullback, obviously we made some strong divergence here, but momentum couldn't get any type of indication that you were turning lower. Even on the pullback, 40 held as support. Change in the momentum profile. Something's different. There's a change in behavior, right? So long story short, once we broke 71, that kind of changes things for me. So I'm more neutral here on Kiwi near term. Not surprising, as our focus was higher in Aussie, but this was certainly a much laggard. I think it might be just playing catch up a little bit, but ultimately, I think you still want to get short. I just want to see what this retracement looks like. Okay, I wouldn't stress that 38 too, and the 50 comes on the upper parallel, so okay. And the 1618 comes right there. Okay, so some levels to consider if you're holding longs on this, on now that we've broken the upside target, or the upside of the opening range for the week, 71.31 and 71.46. It's a basic 236, but it's a real, obvious key swing low here. 1, 2, 3, break, saw acceleration. So I'd watch both of those regions, 71.31, 71.46, this zone for sort of near-term resistance. Also, you have the swing lows they made back here in August, and the convergence of that 1618 we just drew off the low. So interesting targets for the upside. Wouldn't necessarily look to fade it there, but I'd look for a reaction. More so important would be the 618 extension of the decline. Yeah, a little bit further out in time here. This is basically looking at next week. So it's sort of an updated chart for you on the Kiwi. Let me bring this to a 240, make it clearer. Whoop. All right, so those are the levels I would be working with. Again, as a disclaimer, I don't have anything on this. Haven't really been getting involved in Kiwi at all. So I wanted to see that median line hold. It didn't. I'd be more interested to see if this thing rallies and holds that 50 line before getting any short exposure. Any questions on Kiwi? Okay, sorry about the lack of conviction there, but the only thing I liked on this was the turn that we talked about here. Turned us dramatically bearish. To start off the week, as we started to turn here, all we needed was a break of the weekly opening range to get it continued, but market had other plans. Moving right along, last thing I wanted to cover from my end was gold. Just an update on where we are in that trade. Another one that we've been, I'm sorry, that's silver. Another one that we've been talking about, or we highlighted really early in the week. And if you guys remember, real nice bounce off a key zone of support last week. And we were looking to see how far the upslope had. Excuse me. The break to the upside saw a move beyond this channel resistance for the descending move, for the descending channel here. And we wanted to stay constructive while basically above the weekly opening range low, which was basically almost at the open. You're talking about 1275. So an upside bias while above 1275. We didn't have this upslope to work with yet. This is something that's developed over the last few days. But certainly the levels really worked out really well. Looking for 1290, we got that. Looking for 1297, we got that as well. So the high was exactly an overnight trade, right at 1297.39. So Where from here, Mike? Well, you're getting divergence in near-term momentum. You're seeing a little bit of a recovery in the greenback. It might be a good time to see a little bit of a pullback here. Bullish invalidation for the broader uptrend. I brought up to the weekly open. Still remains right there at 1275. As long as we stay above where we opened the week, an extension of the slope that we're following here, a pivot here, looked pretty damn good. Boom, acceleration, resistance, 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 acceleration, support, support. And again, if we just take this and kind of, extrapolate it off the low here, and no credence to it, but guess what? Converges around the weekly open. Okay, topside break beyond here. I want it, I removed the 50% retracement on purpose because I just wanted to keep this closer, but something to keep in mind, guys. The 50 comes in at 1309. More so, the upside break of an ascending formation, you'd expect to see acceleration. I kind of want to hold on to 1320. Okay, and that's this one right here. Interestingly enough, that was the open for September trade. Okay, but just be on the lookout near term. I do think you definitely could see some pullback here in the gold trade, and with the dollar doing what it's doing, not too surprising. Now, if you take a look at the daily chart on the right, you also note that you have that, aside from the 38.2 retracement, you have the swing highs that you made back here in, April and June. Little spike high through here, but the break, massive acceleration. Kind of messy on the way down, so I'm not stressing it, but lo and behold, the 38.2 is right there as well. Momentum, right, testing 50. So, long story short, look for a near-term pullback in gold. Ultimately, I would like to fade that pullback. Okay, that's everything that's on my plate for today. Let's jump into your questions. If you do have any questions or trade setups you want to review, feel free to throw them on the message board. Let's take a look at Pooja, who wants to really get into depth with this Euro-Oz trade. So let's look at the weekly you're talking about, huh? All right. I don't even have a weekly chart set up on it, so let's do this together. Oh, let me see what you have. Take a peek at what you got here. You're asking me, would I give any credence to the blue line, Pooja? You talking about the blue line that you're extending there off the lows from, what is that? From the 2012 or 2011 low? From this low? So this is how you have it drawn, or what I'm seeing off of your chart is something, whoops, like this. Correct me if I'm wrong, Pooja. This is basically what you're looking at. And your question is, is there credence to that blue line? There could be, not really. To be honest with you, the cleanest reference points I'd be using. But the slope does seem to have some merit. Okay, bear with me one sec, guys. I'm just going to take a quick look at some things here. Okay. So this slope right here hasn't really done much. I'm going to get rid of the 50 line, just kind of leave it there right now and see how it does. And let me see what this looks like. Okay. The question at hand I have here is whether this is a true break of that basic trend line resistance off the highs. Now, I don't like, again, using these really emotional highs. This is the first week of the 2016. No, I'm lying. What was that? What event was that? I can't remember what that August event was, but in any event, I don't really want to stress this red line, and the fact that you didn't see quite acceleration push, I'm just going to get rid of that for the sake of clarity right now. My basic confusion is the bias, because my chart shows a breakout pending while yours has already broken out. So yeah, if you were looking at that basic trend line, it does show that it already broke out. And same thing here. So this is what we were looking at on the daily charts for Euro-Oz, and this is what I've been following. Again, there's that basic trend line, and while you did see a couple of touches of it, perfect touch, again, kind of sailed through it, but the last couple of days of last month, really strong touch again, and the break, here's the pop. So the pullback, you basically look for support at the monthly open as far as that. If you're asking me what the bias is, Pooja, are you talking about like the longer term bias? Because I'm pretty constructive on this long term. We got to talk about what time frames we're taking into account here. I'm of the mindset this thing's got a lot of room to go on the upside, but near term, I would be expecting some sort of exhaustion pullback. If not, maybe a test of this line first and then the exhaustion pullback. But the reason I was so hesitant yesterday when you were talking to me about this is because of what we were doing in price. What do we talk about, that 52.26 level? Even if we break through that, that was pretty close right there. It's only 20 pips off. Euro-Oz a big swinging ATR, way more than 26 pips. And, it was a quick poke through. I thought this was straight up going to just run right into that 50 line. Remember, key resistance is still way up here. But we didn't. We pulled right back. So what do you do with this right now? Honestly, I have no clue, Pooja. I'm not going to even try to BS this. I'm completely neutral on this trade. This could go so many ways, and you're testing such critical highs that, we pushed through the 2017 high day close. At that point, I wouldn't even look at the high day close anymore. I just look at the concerted high. That seems to be something a little bit firmer of resistance. So we'll change this from the high day close to just the high. But again, if you put a gun to my temple, I tell you it probably moves lower first. Tests former channel or former basic trendline resistance, maybe even the weekly open. Then if we rebound and that holds, sayonara, we're on our way into 154. But, it's an uptrend at resistance testing yearly highs. You know what I mean? Near-term buys, I'm looking for pullbacks to buy immediately, like above 151 or the orange trend line on my chart near 149.80. So let me show the folks here your chart or what you're looking at here. Near the orange line you're talking about. So you're talking about this real steep slope off the low. Okay. You're talking about this. That converges with the 50-day moving average down here. Sure. I don't necessarily, what's the word I want to say? You have the monthly opening range low here. My thought process, Pooja, and again, this is just my humble opinion, I'm not in this, is if we do break the monthly opening range low on a trade like this, which has been pent up into some highs, you're probably going to see a deeper correction than that trend line. If we were to fail here and break the monthly opening range low, Yeah, this would actually be a target that I would probably look to play on the short side, to be quite frank with you. But um, I think if you break the lows, you risk a larger correction right back towards the median line, if not even deeper, like 47.19, basically that pivot zone there. Pooja, does that make sense? This is a tricky one. I've intentionally stayed away from your Aussie for that reason. Um, you have it near 49.80, you're saying. Yeah. So, you have a little bit closer. Okay. Well, if you're looking at a little bit closer, sure, but 49.43 is going to would be a nice stop to put your trade against if you're going to try to play the long side there. Because, like I said, if we break the monthly opening range, inherently that gives you a short bias. Momentum is not really looking super constructive here, but it's not bearish certainly. But if you were to break below the monthly open and the monthly opening range low, I think you risk a much, much steeper correction. Just keep in mind we're testing the early highs, and near term, you're testing upslope resistance. Make sense? Yes, thanks. That monthly low is important to watch. Yeah, I think so. I think so. And especially because if on a pullback, for me personally, Pooja, I want to see the monthly open hold as support. So when the monthly opening range low is just below that, certainly in my mind, when we break below the monthly opening range low, that's all the validation we need. Sayonara. I do not want to be part on the long side on a move like that. Make sense? So that is your Aussie number 11. Yes. Okay. Yes. Thanks, says Pooja. You're more than welcome. Guys, I want to thank everyone who attended for today. Don't forget, Jamie will be on at 11 a.m. For the midweek strategy webinar. Sorry, I misquoted you on that yesterday. He said he was going to be on, but he wanted to push it back a day in light of FOMC minutes. So now that we got that noise out of the way, stay tuned. He'll be on in just an hour and a half. And I will see you on Monday morning, or actually tomorrow. I'll be doing Foundations of Technical Analysis webinar, free webinar on daily effects, talking about strategy. So definitely encourage you guys to come there. Again, in the public forum on Monday, and back here on SB Tuesday, Wednesday, and Thursday of next week. Guys, have a great weekend. Best of luck trading, and I'll see you tomorrow morning. Cheers.